Good afternoon, everyone. Thanks very much for your time. My name's Nicholas Reid, and on behalf of Pilbara Minerals, I'm very pleased to welcome you to today's investor and media conference call and webcast for the Definitive Feasibility Study on the Pilgangoora Lithium Tantalum Project. This follows the release on the ASX platform earlier today of a package of information, including the DFS on a base case 2 million tonne per annum development of Pilgangoora, together with a pre-feasibility study on a 4 million tonne expansion option and an associated investor presentation. A live webcast of this teleconference is available through the BRR Media Service using the link provided in the ASX release. A recording will be available at the same link shortly following the conclusion of today's proceedings. Leading today's call for Pilbara, I'm very pleased to introduce the company's Managing Director and CEO, Mr. Ken Brinsden, and Technical Director, Mr. John Young. Also available to take your calls, we have the company's Chief Financial Officer, Brian Lynn, and General Counsel and Company Secretary, Alex Eastwood. Welcome to all these gentlemen. I'd now like to hand over to Ken Brinsden to kick off today's call. Thanks very much, Ken.
Nick, thank you. Good day, everyone. Welcome, and thanks very much for joining us as we introduce the new information we've placed in the public domain today, the progress of feasibility works around the Pilgangoora mine, and in particular the 2 million tonne per annum base case development for Pilgangoora and the option to continue to expansion of 4 million tonnes per annum. It's a pleasure to be able to pull that package together and demonstrate the merits in the Pilgangoora project, and a project which we think is really important in the global context with respect to lithium raw material supply. The key themes that you'll hear me address a bit during the course of the call primarily relate to the key advantages that Pilgangoora brings to the table. Firstly, preeminent location in the Pilbara. Fantastic place to be building a mine and just 120 kilometres from the port. So clearly that's as good a location globally as you'd want to be developing a hard rock operation. We've continued to demonstrate the serious scale in the Pilgangoora resource, massive growth in the resource during the year, commensurate growth in the reserve during the year. And I'd also be pleased to say that really we would continue to expect the resource, and for that matter the reserve, to continue to grow from here should you continue to invest in drilling. It's clearly a massive system for which we are really today only continuing in a relative sense to scratch the surface. An amazing system and an incredible discovery. The resource is really high quality. It's high quality in the ground and it's high quality as it's processed, producing high quality products. And it recovers well. So all of that contributes to a project which has a very, very low cost base. And again, that's something that I'll reflect on a little bit more detail as we continue to talk to the results from the DFS. But clearly all those factors, the location, scale, the resource and product quality, are all very important parameters that continue to demonstrate Pilgangoora's merits, but in particular as a function of its delivered cost base and the cost of products delivered. Firstly, we'll focus on the Definitive Feasibility Study. It's the base case for the development of the Pilgangoora Project, and it includes a 2 million tonne per annum processing capacity and, of course, commensurate run-of-mine ore mining capacity. Over the life of the mine, it produces 314,000 tonnes of spodumene concentrate per annum. But importantly, in the first 5 years and in the first 15 years, there is actually tonnes in the first 5 years in particular, well above that, to approximately 350,000 tonnes per annum of spodumene concentrate during the first 5 years. It's also going to be a reasonably significant producer of tantalum, and over the life of mine, average tantalum produced is 321,000 pounds of tantalite per annum in concentrate form. Tantalite is something I'm going to talk in a little bit more detail because it's become more important as we continue to progress the feasibility works and as a result of some of the important subsets of the metallurgical test work that's been undertaken as part of our feasibility. The DFS project delivers very low production costs, in fact lower for the first 15 or commensurate 15 years in comparison to the pre-feasibility study. And they are US $207 per tonne on a CFR basis. For the first 15 years, US $169 per tonne on a CFR basis. It's important to remember that there is a distinction in the way we're presenting the cost base in the Definitive Feasibility Study. We're quoting the costs in the same way that we discuss revenue, and they're being quoted on a CFR basis. The Pre-Feasibility Study historically had around Pilgangoora had discussed it on a free on board basis, or basically as it delivered on a ship in Port Hedland. And to give you a like-for-like comparison on an equivalent cost base, first 15 years derived from the new Definitive Feasibility Study, US $196 per tonne CFR. The equivalent PFS cost quoted as per a CFR delivered basis is $207 per tonne. So clearly some reasonably substantial gains won through the Definitive Feasibility Study process. And I'd like to just mention primarily where they've come from. The first was savings in mining costs compared to the Pre-Feasibility Study. We priced based on a detailed scope of work for the Definitive Feasibility Study through 7 groups, and we used a short list of 3 to average the pricing inputs to the Definitive Feasibility Study, and we saw some substantial savings as a result of that work. Secondly, we've seen improved recoveries, and that's true in both lithium and tantalite, but in particular in tantalite. And the benefit is an improved credit to the cost base of a spodumene tonne. To give you some idea, tantalite recoveries have gone from approximately 45% as per the previous pre-feasibility study, and they've increased now to in the range of about 53 to 59%, depending on which zone of the ore body you're referring to. So some big wins there. Furthermore, the tantalite has been demonstrated to be an improved product, and would propose to sell a 30% tantalite concentrate. So that has some benefits from a pricing point of view. There's been a modest capex increase, but relatively simply explained, primarily through the continued growth of the project, and in particular the reserve PFS to DFS. Just stated simply, bigger tailings dams, bigger cleared areas for the purpose of waste dumps, tailings dams, pit locations, all that sort of stuff. Site design works, drainage, you name it. So all those things contribute to an increase in the equivalent scope. But we've also had a change in the process flow, having moved from 3-stage heavy media separation to 2-stage heavy media separation. The benefit in doing that is to simplify the plant. However, it does send more material downstream in the plant, and that means bigger mills, bigger flotation tanks. The benefit in that is, in fact, the improved recoveries that I've referred to, both in lithium, and that's also true from a tantalite point of view. So those things have increased the scope, but we think still very competitive project, and still relatively modest capex at 214 million Aussie dollars. All of that contributes to overall project economics of a plus $700 million net present value, and importantly, a very rapid payback from the cash flow that's generated out of the operation. And as I said, that's particularly true for the first 5 years, where we have the benefit of slightly lower strip ratios, higher grades, and as a result, improved revenue for a very rapid payback. To establish the pricing inputs for the Definitive Feasibility Study, we've created a consensus model from several independent forecasts, and basically used them on average for both battery-grade lithium carbonate and for spodumene concentrates. Both those texts have been established for the purpose of the Definitive Feasibility Study, so that we could use the mechanisms that are aligned with the general lithium offtake, and for that matter, offtake that's yet to be executed, whereby we price spodumene off the combined effect of Chinese domestic pricing and import pricing. So as a result, you require both price decks both a battery-grade lithium carbonate deck and a spodumene deck for those tonnes that are not subject to those offtake agreements. All of that leads to, we think, a healthy pricing outcome, and in particular for those tonnes that are priced against the general lithium offtake agreement. And as a result, the life of mine estimated price is $537 US a tonne CFR. Our tantalite pricing is derived from a single source, being Roskill, just having been identified historically as the leading sort of independent economic forecaster in that area. They've estimated what we think is probably still a relatively conservative tantalite price in the range of $65 a pound through to about $80 a pound over the course of the next 5 to 7 years. And as I said earlier, that relates to a 30% concentrate, which is what we'd propose to sell from the Pilgangoora project. So the Definitive Feasibility Study, fantastic economic outcomes, primarily driven by very, very cost-competitive production. And we think that's going to be a key theme for the future of the Pilgangoora site as a key raw material supply base for the industry. Moving on to the Pre-Feasibility Study. Again, driven by the change in the scale that emerged during the course of drilling programs this year, growing the resource significantly, but of course also the reserve, and a view that we'll continue to grow the reserve from even within the existing resource base as more drilling is conducted at site. So plenty of potential for both the resource and the reserve to grow, and therefore plenty of potential to continue to assess the potential to expand operations. The pre-feasibility study contemplated a 4 million tonne per annum processing upgrade, and as a result, it would produce, over the life of the mine on average, 560,000 tonnes per annum of 6% concentrate. The pre-feasibility study also considers the introduction of technical grade concentrate being a subset of that 560,000 tonnes. Now, you don't get an immediate translation of double capacity from 2 million tonnes per annum to 4 million tonnes per annum on average over the life of the mine, and that's because the ramp up from phase one, or the base case being 2 million tonnes per annum, and to a certain extent the ramp down in tonnes at the end, overall pushes down the average concentrate produced. But whilst the plant is processing 4 million tonnes per annum, then in essence it doubles the concentrate capacity. The cost base is even more competitive for the expanded operations, of course, to start to generate further economies of scale, and we've estimated over the life of mine that the concentrate cost base is $180 US a tonne CFR after tantalite credits. I would expect, quite possibly, the lowest cost of hard rock operations globally at that point in time. Again, relatively modest incremental capital to expand from 2 to 4 million tonnes per annum, being 128 million Australian dollars. All of that translates to a very, very competitive project. 1.16 billion net present value, massive cash flows as the operations continue to expand. A very, very good project, and one for which we think ultimately is a natural fit for the Pilgangoora site, but it's going to be subject to more work. So we'll need to do more feasibility work, and there will need to continue to be an assessment of the market conditions and also a chemical conversion capacity, whether it's within or outside China, to continue to facilitate the mine's expansion. But that's a theme that we expect to continue to unfold. Our thesis is that there is substantial conversion capacity going in, both in China today and over the course of the next 4 to 5 years, in which case, as I said earlier, we think Pilgangoora is a natural source for the raw material supply. Okay, another couple of quick comments before we move to questions. Two additional subjects worth speaking to. The right of first refusal, for which there's been some further action over the course of the last week. We've issued our final sale notice with respect to the right of first refusal, for which we've spent a lot of time ensuring that it's as good a sale notice as is possible under the agreement. Our expectation is that is a rock-solid sale notice, and in essence, good for the purpose it's intended to be. Having said that, it would seem likely that we will continue to receive some further challenge from MinRes in respect of that. And should that materialise, we would likely push the sale notice to expert determination so that we can maintain a reasonable timeline around the development of our project. And that's a process that's well thought through and well understood inside the sale agreement. With respect to General Lithium, fantastic relationship there. We continue to work with General Lithium on multiple fronts, but in particular the proposed joint venture chemical plant. And we'd be expecting to put some more information out on that project over the coming weeks, and look forward to demonstrating how we see that project unfold. General Lithium, of course, there's a continued commitment to the further links in the chain in the relationship, the equity investment, once all of the conditions precedent fall away with respect to the offtake agreement, and as I said earlier, the joint chemical plant. Lastly, project execution. So we're flat out, and the team's working very, very hard, continuing to push the project as fast as we can. There is good progress being made on all fronts, whether it's the engineering, the detailed engineering, which ultimately leads to the final price on the processing plant, all the project other critical path elements, native title agreements are close, water agreements, pastoral agreements, obviously the environmental approvals process, all ready to go. And we're looking forward to demonstrating how all that unfolds over the coming weeks and months as we move towards construction by the end of the year. On the subject of financing, that's obviously where we'll start to take our efforts over the coming weeks and months, so that we can set the project for execution during the bulk execution during 2017, again with a view to commissioning late 2017. We haven't made any decisions yet with respect to financing. We're leaving all options on the table, and we'll continue to work through each of those options. And with such a strong project under our belt, we're not expecting the financing itself to be overly complex or particularly difficult. So, again, we'll keep the market informed as that unfolds. That's it from me in the way of introductory comments. But, of course, we would all, whether it's myself or the rest of the Pilbara team, welcome questions from the floor.
Thank you. If you wish to ask a question, please press star one on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star two. If you are on a speakerphone, please pick up the handset to ask your question. Your first question comes from Stuart McIntyre from Blue Ocean Equities. Please go ahead.
Hi guys. Look, just a quick question on the price deck you've used. I can see you've obviously used 4 different inputs there, and it's useful you've put in that chart showing frankly the wide range in views on prices. Looks like about $150 a tonne on a spodumene basis for most of the forecast period, or trimming in the middle. But you sort of make the comment that it appears quite conservative, the $537 a tonne, certainly relative to the latest spot price of $650 a tonne. I guess what I want to get a bit of handle on is I guess the off-taking pricing mechanism with General Lithium. I mean, you've talked about it a bit in the past in terms of being linked to the lithium carbonate price. I'd like to get a bit of a feel for what lithium carbonate price you'd need to see a $537 a tonne average spodumene price. I mean, I've done some rough numbers. I reckon it's probably somewhere between $9,000 and $10,000 a tonne. Would that be about right?
Yeah. Yep. Good questions, Stu. With respect to, so I'll deal with the first part first, the build-up of the deck there. You're absolutely right. There is a very, very wide range of views there. And in fact, it's true both from a spodumene outlook and also from a battery-grade lithium carbonate outlook point of view. Dealing with lithium carbonate first, an observation I'd make about where the industry is at today is that it's not really well understood the the disconnect between Chinese domestic pricing and what's otherwise typically described as import pricing to China. The independent economic forecasters, for the most part, almost ignore Chinese domestic pricing, and our view would be you cannot ignore it, and you would ignore it at your peril, because it is a very real phenomenon in the market. Cathode material buyers in China are buying big volumes at what people, with somewhat of a throwaway line, describe as the spot market. It is not the spot market. It is much higher volumes than a marginal spot market or trades at the margins of the lithium carbonate business. The problem that we have in that regard is not many people are prepared or take the view that you could forecast that then. So one of the reasons for building a consensus deck was to try and find people that actually are prepared to accept that Chinese domestic phenomenon is real and forecast around it. So that's kind of part one of the build-up to the pricing model. Spodumene, a little bit similar in a sense. Some people have the spodumene price compressed against a low carbonate price, which to us just doesn't look like a natural fit. You know, I'd put Roskill in that category, for example, where they have a very low carbonate price, but they have, in comparative terms, quite a high spodumene price. Just doesn't look like a natural fit. The benefit in building a consensus model, we think, is that we get, in effect, the smoothing of the relative views of people dealing with those complex markets. To your specific question about general lithium and our pricing, general lithium and our offtake pricing model, yes, it's priced against the effect of both import pricing and Chinese domestic pricing. And yes, it's true that you know, today's price or price history, recent price history, would drive a significantly higher price than what's currently described as the average or life of mine import price. And, you know, I'd say that's both good news and bad news in a sense. It's good news that we've been able to achieve what we think is a very healthy price for our spodumene. It's bad news in a sense because the independent economic forecasters are not forecasting, at least not as high a price as is currently shown by actuals in the market today.
Yeah.
I haven't got the numbers immediately at hand, Stu, but I would hazard a guess and say you're probably not that far off the mark. You know, a normalised model, combined effect of import pricing and domestic pricing in China, maybe that's about right, sort of $9,000 to $10,000 a tonne. But yeah, obviously I haven't got the numbers in front of me.
Okay. I mean, I guess what I'm really getting at is, you know, the economics of the project are obviously very punchy, no matter what metric you used, and arguably you're using a pretty mean long-term spodumene price of $535 a tonne, which, if my numbers are right, effectively mean, you know, imply that the lithium carbonate price of $20,000 a tonne would effectively have to halve for you to be getting $535 a tonne. So, you know, quite a pullback in that price deck, particularly when you know, in parallel, you sort of forecast in that figure 5 that you know, the spodumene, you know, the spodumene market looks like it's likely to be balanced for the next couple of years in your sort of, I guess, your mid-range demand scenario. So, okay, look, I did have one other question. Sorry, go ahead.
Yeah, well, our competitive position comes through, we think, a level of innovation in that pricing model, but of course also having an ultra low cost base. So that's, you know, that's the value add of the Pilgangoora resource.
Okay, perfect. And look, just finally, I realise you guys are also working on a study with General Lithium, working on a 50-50 JV to build some downstream processing facilities offshore. Just a bit of guidance on when you expect those studies to be completed.
Yeah, we've been continuing with the desktop work, and that has actually been progressing well. We're probably not far away from publishing some more data on that project, but we'd have to get the DFS and the PFS out of the way. I'm sure you can appreciate that they've been consuming the office's capacity in the last couple of weeks, but we're not too far away from getting that data out, so you'd expect to see that in the coming weeks.
Okay, perfect. Thanks, Ken.
Thank you. Your next question comes from Ben Crowley from Macquarie Group. Please go ahead.
Yeah, hi there, Ken. Hello?
Hey, Ben.
Hi, how are you? Guys, I just wanted, just around the tantalum a little bit more. Obviously, it looks like there's a fair bit of that revised cost base that's predicated on those byproduct credits. Is offtake of tantalum or tantalite something that you're going to be pursuing?
Yeah, very much so. Yeah, in fact, that has been basically a concurrent package to the Definitive Feasibility Study. So backing up the Definitive Feasibility Study, we've had more memorandums basically to establish supply relationships or trading relationships. But they've got to be converted to formal offtake agreements. But as a general comment, I would say it's a sought-after product, and we'd expect that to progress during the normal course of business.
Okay, all right. So you've got a reasonable bit of confidence then in sort of locking in those kind of numbers?
Yeah, again, a general observation is that the tantalite industry has been, how to describe it, sort of hamstrung in a sense by having to rely on sort of Central African production.
Yeah.
And I think it's not particularly comfortable for the industry. So new Western sources of supply are basically well thought of, put it that way.
Yeah, okay. All right. That sounds good. And then just on, it's a pretty aggressive timeline for getting everything, kicked off and then hitting commissioning at the end of next year. Could you just give us maybe a bit of a bit more detail on, I guess, both on the approvals front, but also on the plant and equipment? What are the critical path items that you need to get really squared away?
Yeah, so look, it's fair to say, Ben, that we haven't been sitting on our hands. So in parallel with wrapping up these feasibility studies, we've been progressing the early contractor involvement process for the plant. So clearly the plant is the big ticket item as far as delivery of the site is concerned. So we're very conscious of keeping that element of the project on track. There's 3 groups that have been shortlisted in the ECI process. The ECI is meant to take 3 groups forward with more detailed engineering and ultimately establishing a fixed price for the contract. And our intention would be to make a decision late this year with respect to the award of that contract, so that we can commence works and get action happening on the ground. There are long lead items, some of which we need to secure in the coming weeks as well. We'll do that on behalf of the contractor that's ultimately chosen to deal with those long lead items. There are basically 2 that come to mind: the HPGR crusher, and then also the mill. So those 2 items need to be sort of front and centre for the team, the execution team. But that team's been established now in their office, and they're working at a frantic pace around, as I said, the ECI, but also the early works packages that kick off over the coming months.
Okay, cool. And on the approvals front?
So approvals documents are basically stamped and waiting for the tenure grant. Tenure grant is subject to the native title agreement and the signing of what's called the state deed. So both those packages are well advanced now. So again, not too far away from inking them. In which case the environmental approval docs go in. But we've been in sort of constant contact with DNP with respect to the project and how it progresses, and looking forward to an orderly transition through the environmental approvals process.
Okay, great, thanks. And just as a final one, is there any of that sort of stuff that's, I guess, predicated or conditional on sorting out the right of first refusal and getting that resolved?
I think the right of first refusal, it doesn't have so much of an impact on the progress of the execution project, and certainly not during the course of the remainder of this year. But we would want to have the right of first refusal progressed, well understood, and signed off, or accepted or not, as the case may be, so that we can progress the rest of the financing around the project. That would be a key link in the chain. Not so much the other project execution items, which can continue based on the current work in progress and obviously cash in hand.
Okay, all right. Thanks, guys. That's all mine.
Thank you. Once again, if you wish to ask a question, please press star one on your telephone and wait for your name to be announced. We will now just pause for a moment to allow questions to enter the queue. Your next question comes from Paul Garvey from The Australian. Please go ahead.
Hi there, Ken. We're good to get your thoughts a bit more on the supply and demand outlook, and particularly the supply side. We've just seen the recent news out of Greenbushes about a big expansion plan there. Where do you sit? What do you see as the risk around potential for an oversupply to develop in the lithium market at the moment?
We've included a bit more information in the Definitive Feasibility Study release and in the presentation, where we've talked with particular reference to the chemical conversion market, and obviously how that interplays with hard rock spodumene mining. And our take on where the industry is at is that there is substantial expansion capacity going in. In fact, there's already latent capacity today as well. So the combined effect of those two and expansion capacity coming in particular from WA, to us still looks okay, in the sense that there's not a gross sort of oversupply situation, and if anything, there's probably a bit of risk still to the undersupply. Now, I'm aware that runs contrary to some people's views, but we don't agree, primarily with the view that China is sort of not a key to the whole expansion capacity unfolding. We're integrated quite deeply with the industry there, and we're given sort of insights into where individual converters are heading with respect to their expansion capacity, how they're expanding, and in what product categories. And we've basically built that up into our own demand model to assess how many tonnes might otherwise be available or under demand from a spodumene point of view. That's what's inspired us to both continue to push the Pilgangoora Project towards development at 2 million tonnes per annum, but not only that, at least consider the option of 4 million tonnes per annum not that long thereafter, because the capacity is continuing to grow. Now, with respect to Greenbushes and or conversion capacity in Perth, I think that's a great affirmation of the direction of the industry, both China's expanded conversion capacity, but equally faith in the hard rock source of supply as a key to continuing to grow the raw material supply base, and in particular the quality end of that supply base. So I think, all of that is good news. The other thing that's important to note about Greenbushes is that it is in essence going to be wholly consumed in their vertically integrated businesses, because they're all expanding, and including Albemarle through the purchase of Sichuan GRM, their own capacity. So whilst Greenbushes might expand, there's every chance it gets consumed by their own expansion capacity or chemical conversion capacity.
Mm-hmm. Okay, and on the potential for the expansion, what's going to be the determining factors on whether that goes ahead? Is that just as simple as doing the work and progressing that and moving into development, or would it be reliant on getting the 2 million tonnes in and seeing how the market adapts and what the market looks like at that point in time?
Yeah, I think that is a reasonable call. So there is more work to be done from an engineering point of view, but it's a bit of a doddle given the amount of work that's gone into the Definitive Feasibility Study. The next key determinant is the market itself. So does the chemical conversion capacity unfold the way we'd expect it to in China, or for that matter, ex-China, now that Tianqi is talking about facilities at Kwinana? And we would also consider that in light of our own conversion capacity with General Lithium. So all those factors would go into determining whether there's a position in the market for expanded tonnes at Pilgangoora. based on the way we see the world today, we'd say, well, yes, there's a reasonable chance that there will be, in which case we'll continue to push that side of the project.
Yeah, okay. Thanks very much.
Thank you. Your next question comes from Trent Barnett from Hartleys. Please go ahead.
Hi, Ken. I was just wondering, in the release you talk about another potential offtake agreement. Are you able to expand on that at all, and in particular whether it's sort of more simple than the general lithium and therefore could perhaps go through the first right of refusal process quite quickly?
It's straightforward in the sense that it's more like a classic supplier relationship as opposed to being consistent with an equity investment or even a chemical facility. So to that extent, I'd say yes, it is a bit simpler. It's considering pricing models not that dissimilar to those that we've discussed with General Lithium, and it also includes an element of prepayment, which is important from our point of view to continue to progress the funding of the project. So that's a conversation that again, a relationship that's grown over a long period of time, and we'd like to think that we can get that wrapped up pretty soon.
Okay, thanks.
Thank you. There are no further questions at this time. I'll now hand back to Mr. Brinsden for closing remarks.
Thanks, everyone, for your participation on the call. Very much appreciated. And don't hesitate to get in contact with either myself or anyone of the team at Pilbara. If there's anything that you'd like to follow up in more detail, we'll do our best to get back to you as soon as we can. Please enjoy the rest of your day. Thank you.